Hi, today we're gonna cover information flows within accounting systems. So today, uh, with the advancement of technologies, software systems are used, accounting packages are used. So maintaining account is really easy, but the underlying concept are still the same. Certain accounts are debited, certain accounts are credited, and in the end, the debit total should match with credit total. So that's the basic premises, and the way information flows through these are type of uh, sub processes. Like first, the transactions, like business transactions, are recorded in 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 general entries, and in entries certain accounts are debited, certain accounts are credited, and those uh, accounts are further rearranged into general ledger. Like every account has its own description of debit and credit transactions, and later on a trial balance is created for a particular period, for which has a listing of all the debit accounts and all the credit accounts, and the balances are matched. If there's an adjustment is needed, adjustment is being made in trial balance and ledger account. um, and after we have the balances in trial balance, the financial statements like profit loss statement, like income statement, statement of equity, balance sheets, these kind of statements which are published to regulators are prepared. So that's the accounting flow. So in high level, let me give you an example. So le- uh, let's suppose we are recording a transaction like paying a rent. So the so first we record a general entry like rent account debit to cash account. So there are three basic rule for accounting. All the first rule is expenses are debited where the incomes are credited. And second rule is debit the giver and debit the receiver and credit the giver. And the third rule is uh, debit what comes in, credit what goes out. So in this case, cash is going out, rent is kind of expense. So we are debiting the rent account and crediting the cash account. So in this case, let's suppose this is like X amount. So this is kind of a journal entry, and there's a ledgers are prepared for. Let's suppose I'm giving example of a rent account general ledger. So they are debit and they are credit. Since we receive the cash, so the cash will be debited in this account. So let's suppose this X amount is debited in case in this case we paid rent. That's the reason it's debited. In case we receive the rent, it would be credited, and net amount is figured out by adjusting the debit and credit account. So trial balance is kind of a statement which has listing of all the debit account and all the credit account. So you can think of rent is will be shown here, and credit account like incomes. In this case, you can say sales will be shown here in credit account. And first, and in trial balance, we reconcile our debit versus credit. Once we have this picture for an accounting period or the reporting period which we choose, we we put this information into uh, in other in the financial statements like income statement and balance sheets. Balance sheet has a change of equity statement also. Some balance sheet has part of it. So that's what it is. Thank you.